Good morning, everybody. Good morning. Good morning. Good morning. Hope everybody's doing well. Let everybody file in here for a minute and we'll get going. Good morning. Good morning. Good morning, Scott. Morning, Gerchi Winde. Appreciate you joining us. Hope everybody's having a great morning. Looks like we're pulling back, obviously, this morning. So we'll discuss that. We'll discuss SPX option structure and kind of what we're looking at on the horizon. So 21 VIX, yeah. Yep. We'll see how much more we get out of it. We're at an interesting juncture on SPY and Qs as well as the SPX. So yeah, we'll see. Yeah, not to look at hindsight, but we'll discuss this, but our market trend model has been indicating weakness for past week to a few days. So, and the SPX option structure continued to weaken. If you go back and look at our pre-market preps, we were seeing in individual equities across all of our scanners were not populating. So that's always a heads up for us. So, all right. Let's go ahead and get started. Thanks everybody for joining us this morning. Again, like and subscribe on X and YouTube. You'll be notified when we go live or post any of our content. I posted extensive content this morning on X, more than what we usually do for the pre-market prep. Just wanted to look at yesterday's price action. Go back and watch our pre-market prep plan for yesterday. I think we had a great plan heading into the day. The rejection at 69.35 was a great opportunity to short. We talked about that in the pre-market prep, and then you had a nice trade to the downside, and there were some areas to the downside where you could have taken profit. One of those is one of our key proprietary levels, COTMP, so make sure you check that out. But we're going to go ahead and jump right into it. This is Michael coming to you from GameEdge.us on Thursday, February 5th with our pre-market prep session. As always, we'll cover those three pillars: sentiment, structure, and trend. And then we'll look at some individual equities. So you can post those tickers in the chat and we'll get to them at the end. So let's go ahead and jump right into our market trend model. So this is not what I usually show, but we'll have our market trend model that I usually provide. So this is our tick tag combos. If you're not familiar with GameEdge, these tag combos have been extensively back tested through one of our partners called EdgeRater. It gives us an ability to back test these tag combos and what the probability or outcomes are over a large set of data points. So again, when these tag combos turn on, obviously bearish or bullish, this gives us an idea of the probabilities of where we may, if we may finish lower for the day or higher. And then once these are stacking on top of each other, what the probability to the downside could also be. So as you can see, really for the past week, our bullish tag combos have been low or not populating. Obviously, that TC1 is the only one that's been on, but our bearish tag combos continue to stack on top of each other. And basically, this is just aggregating these moving averages, short-term moving averages that we use for our railroad tracks, or what we call railroad tracks, and our momentum. These are 1 to 3 day trading time frames. So again, when these start populating bearish, we start managing our risk and not putting capital at risk. And then if you're opportunistic, you can start to look for the downside. But this is published every day for our members. We have the extensive back testing and data sheets also that you can comb through if you want and look at the tag combos, but we provide those in an easy format for you. That's also included our Game Edge Fast Pass. And then this morning, the link I posted about our market trend model. So again, looking at our market trend model, we've been talking about this really for the past few days, just the choppiness around this colored ribbon, the negative slope in the top of the colored ribbon. So our colored ribbon is our longer look back period, 30 days or longer. That's how we position overall money in the market. And again, once we're starting to cut through this colored ribbon with the bolded white line, this is our intraday instantaneous cumulative tick. And then our railroad tracks are our 1 to 3 day. And once we start seeing that weakening under those railroad tracks, then obviously we start getting less risk averse, a little more cautionary. And then we the previous day, on the 3rd, we tried to see the bounce, but really couldn't get above the moving averages, and we failed very quickly yesterday. So again, this is definitive that the bears were taking control and the sellers were in control of the overall market. And then we cut below the colored ribbon. So historically, that's turning on a bearish tag combo that could be a longer term tag combo if we continue to see that day over day. But we've cut below the colored ribbon now, so we want to see how long we live below this ribbon and if we recover it very rapidly. If we recover rapidly, we have the opportunity to move back to the upside and emerge outside of the colored ribbon. But if we stay below this colored ribbon, which is the cyan line, then we get more bearish in general, and we'll be looking for more downside in the overall market. So we'll watch this day over day, and you can we'll be posting it in our pre-market prep every day or discussing it. So, all right, let's move on to, and I posted our Trading View market trend model this morning on X, so make sure you check that out. Also, great trade yesterday. As I said, 69.35 rejected. Our market trend model was weakening and kept continuing to the downside. So provided a great opportunity for our traders. All right, let's move on to the SPX. This largest, most notional value. We separate the SPXA from the SPXP. The reason we do that is the SPXA is institutional positioning. This gives us an idea of the 40,000 foot view heading into the monthly OPEX. Now, we are still call dominated, but I spoke about this yesterday where we're at with transition. 69.40 yesterday was a transition area on SPXA, and we were testing that pre-market. I said we needed to get above that, or we're going to be a little bit more weakened state, and we rejected that very quickly on the SPXA. Now, we're at the zero, virtually zero, on the net GEC. So again, this is telling us that we're not in a bullish or bearish overall position, even though we are call dominated, but institutions are not positioning for the upside or downside. Basically, there's coasting into the monthly OPEX. So that should tell you what I discussed yesterday, what you should be doing. You should be coasting into the monthly OPEX until we get a definitive directional move. Now, obviously, we're pulling back in the overall market. Basically, what I'm saying is if you're a longer term trader or looking for upside, then you should not have been that should not have been your bias or thesis heading into yesterday due to this overall 40,000 foot view positioning. And these are our tankers or our cruise ships, and they steer the overall money for a longer period of time. So where are we at now? 6,800 to the downside, key level that we'll need to see supportive. You see the GEX transition here all the way down towards 68.25. So for below that, again, we look for more weakness down towards 6,800. And that 68.50 is just a little blip there on the SPXA, but we'll look at it on the SPXP. To the upside, we have to get above 69.35, 69.40 for the opportunity to move to the upside. And that's going to be a key area to watch for rejection as we closed at 68.85 yesterday. And if we test that, that's going to be a confluence on multiple levels today. So keep that 68.80, 85 in mind. All right, moving on to the SPXP. Again, these are our speedboats. These control the daily, weekly price action. And what was interesting to us is, and we've been talking about this really the past week, is these consecutive expiries coming up were very large. So where that money was positioning and where this expiry was, even though monthly OPEX, everybody looks at monthly OPEX, but using our web app and our upper quartile, this was telling us that this week was a increased expiry, and we're probably going to see some overall volatility coming into this week because of the expiries. So we're getting that volatility, and we're seeing where the positioning is going. But we are put dominated now. GEX and DEX transition. Bottom there at 69.20. So we have some key areas that we're lining up now. 69.20, 25, 68.85. Those are going to be two key areas for today if we have any move to the upside. And you see the DEX transition there, 69.40, 45, not really anticipating us to move up towards that level. To the downside, 68.50, we've already discussed that. We've been oscillating around that pre-market. And then once we get below 68.50, not a lot of charm support there. As you can see, we're put dominated. So we'd probably most likely see a move down towards 6,800. But we talked about that 25. So 68.25 would be that next level we watch to the downside. So after these expiries, and obviously we're going to be heading into the monthly OPEX, but this is a high expiry week and then heading into Monday. And then after Monday, it'll be interesting to see where our overall positioning is and how we come out the other side of that. All right, moving on the SPXP GEX ratio. I spoke about this yesterday that we saw an overall bounce in the GEX ratio, but we did not get above 1. Basically, we're flirting around that 1 level on the significant move to the downside. And then yesterday, obviously, significant move to the downside again. And we're well below the 1 level. So again, this is telling us the bears are in overall control. This is call versus put gamma, short dated, and that we had a time component, which is gamma. So this is like a put call ratio, but it gives us an overall short dated look. Again, historically, 0.5 is an area where we bounce, 0.4 to 0.5. Now, we can have sustained downtrend and be pegged at 0.5. That would be put speculation to the downside. But historically, this is where we see a bounce. So we have some areas here on SPY and Qs pre-market that we're going to be watching, as well as our GEX ratio is reaching an extreme. I'm not saying this is where we're going to bounce at, but this is a rubber band effect to the downside. And historically, you'll see all these puts opening to the downside, speculation. Then we reach a level to the downside where we see some overall monetization, and then we'll see a resultant move back to the upside. Now, put monetization can only drive us so far to the upside. If I'm closing my puts, my book is getting longer, dealer book is getting shorter. Obviously, they have to buy to hedge, right? Just mechanically of me closing some of my puts and taking profit, which is normally what happens in an overall cycle that we talk about, that sine wave. We see puts to the downside, we see monetization, we see a bounce in the overall SPX. And then if we do not see the resultant out of the money call speculation, then it's going to be difficult for spot price to move to the upside. So what we would need to see is intraday, in our intraday volumetrics, we need to out of the money call speculation to start coming in on a 0 DT basis, as well as an extended expiry basis. And you need to see the GEX ratio start moving back to the upside, resulting in out of the money call speculation coming in and overriding the short dated put gamma or put speculation. So we'll watch that day over day. And then we move to our next tool, which is our delta balance tool. And this tells us where the positioning is above and below spot price. So spot price is where the SPX price closed at. Now we can force spot price on this chart, and that's what we do with our tools. So that tells us, can give us an overall understanding of positioning pre-market when we're forcing where the implied open is. So we force the spot price at 68.51 this morning, and it may be well below that, but we're at 68.34. So positioning is not really going to change much on this. So the key takeaway here is left-hand plane is your red dotted line. That's your in the money calls and out of the money puts below spot price. So we're below 0. So that tells you you're put dominated. Your right-hand plane is your green dotted line. The left-hand plane has a positive slope heading into the day. Again, that's still bearish, so because we're below 0. But right-hand plane, negative slope, well below 0, dragging the delta balance, which is the aggregate of these two, to -1. So that tells you put speculators are in total control of the SPX option structure. So that is going to give you an idea that price appreciation is going to be extremely difficult. Even if we see some monetization and a short-term bounce, we're going to need to see the resultant delta balance start climbing back above 0, like you saw it over here, right? So that's indicating that out of the money call speculation is coming in. In the money puts overhead are starting to close. A little bit of fear from those put holders. Out of the money puts reached a level where those out of the money put holders either reached their 50 delta or now they're in the money and they want to monetize their capital at risk also. So they'll close those and you'll see a resultant bounce to the upside. Now, projected on out in time for further expiries, we are not seeing a bounce at all. That's why I said these next few expiries into Monday are going to be extremely important. We were talking about this pre-market yesterday and before that the delta balance was continuing to weaken. I said we were seeing weakness into Friday and then possibly into Monday. And now we're seeing that come to fruition now. So this is not necessarily a crystal ball. This is just letting us know where market participants are positioned. And that position can change on a 0 DT, +1 DT, +2, +3 DT basis. Past 6 days, we can't really project that. That's why this chart does not go past 6 days. We have much more confidence in our 1 to 3 day time frame and what we feel comfortable positioning. So that would be Monday, Tuesday into Wednesday, Thursday, Friday. That is basically what from our back testing has shown market participants are doing. They're positioning Monday, Tuesday, or even Friday for Monday, Tuesday, Wednesday, but Monday, Tuesday positioning for Wednesday, Thursday, Friday. And now we're seeing that Wednesday, Thursday, Friday, we're heading into this weakness. Market participants were positioning Monday for weakness into the mid to end week. And now we're coming to fruition. So do we see a bounce? We don't know. But what we're saying is projected on out in time, further expiries are showing weakness. Put dominated, delta balance pegged at -1. So this is put speculators are in full control. So will we be trying to buy the dip? Absolutely not. We need to see this start to change completely. It takes a long time to turn the Titanic. We've had significant down move now. So we could see a resultant quick bounce. We're in a put dominated environment, accentuated moves. VIX is at 21, as Scott said this morning here. So we're going to see accentuated moves both directions, right? So let's just let it play out a little bit and watch for the bounce. Let's see where we bounce. We have our overhead levels we're looking at, 69.50. And then to the upside, 68.80, 85 is going to be the battleground to the upside. Sorry, or 68.50, sorry. And then 68.80, 85 is going to be the battleground, which we'll talk about that here in a minute. All right, net stack command. This is a really important tool in our GE ecosystem that we rolled out. Really, net stack command has always been rolled out, but our transition levels, we've rolled out those a few weeks ago here. And these have really been essential for our members and traders to understand that if we get back above certain levels, we change the overall environment. As of now, Delta, out of the money puts, in the money puts. That's put dominated, as I discussed on our other other tools. Key takeaway here, though, is these out of the money puts become in the money calls at 68.89. We cross that level, then that can be supportive, right? So that's going to be the key area. I said 68.80, 85, 68.89. We'll call it an area via our overall tools. Get back above that, and then we have an opportunity for some supportive price action. So that would be the first area the bulls would need to take back. To the downside, out of the money puts at 68.30. It's going to be a key level to watch. And then 6,800 is that charm level that I posted this morning that could be supportive of these out of the money puts if we stay above that. And then you see where charm changes way above where we're at now. To the upside, you see where charm changes, 68.69. Key area, right? So let's watch that, as well as 69.33 way above us, not likely. Now, Vanna, not necessarily a significant tailwind, but lets us know that once we get back above 68.69, if volatility is dropping, that would be VIX coming down, and we see out of the money calls go in, this can have a tailwind and overcome this significant charm. So 68.69, keep that on your area, these transition levels. So we have a few areas to look at, 68.50, 68, 80, 85, 89, let's call it an area. And then 68, 69 is where that Vanna can start to kick in if we get above that. That would drive us up towards that 68, 85, 89 area. Okay, so that's a key area to watch also. So again, these transition areas really crucial in understanding where we're at within the option structure and complex and where we shift from out of the money puts to in the money calls. And once we start shifting that, overall structure where that can be supportive and where it can help us drive us higher. Okay, so key tool. This has really been vital for us, as well as the other spec charts we've been posting intraday of figuring out, where market participants are speculated at and where spot price is most likely going to be driven. All right, let's move on to SPX0DT. I know we're covering a lot of content and material this morning, so this will be on X. Feel free to go back and pause. It'll be on YouTube also, and you can go through the tools. Put dominated to start the day, as I discussed. So let's go through our key areas again. 68, 80, 85. We talked about that. 68, 89, right? On that key level that we discussed on the charm level. On the charm level, or sorry, the delta level, sorry, to discuss that. And then the Vanna level at 68, 69, as well as the charm level. So those are key areas. So what we like to do is in TradingView, I'll take that net stack command or whatever your software is, and I'll go put a line and I'll put an alert. So I know that once we're crossing above those levels, there's a key transition going on within the SPX option structure. So go ahead and go back, pause your player. You can check those levels out also. So for me, getting back above 80, 85, 89 in that area, bottom of drunken sailor range is going to be key. But you see significant net deltas overhead. These are in the money puts, right? So we're going to have to cause these in the money put holders to have a little bit of fear by pushing up. And then most likely you get some monetization into these overhead areas. But you see significant charm in the money puts overhead as the day ticks on, time ticks on, those continue to decay, right? And the charm just continues to grow. It's going to be a significant headwind. Now, we can overcome that headwind with out of the money call speculation, drive that up a little bit, and as well as Vanna. That's why I talked about that. Drop in volatility, out of the money calls come in, we can overcome some of this charm and we can drive up towards 69.2025. That would be the key area to try to get above. I'm not anticipating that we do that unless we have a large change in sentiment and structure. So 68.50, we're watching that intently. Positive charm there as long as we're above it. Supportive below that, negative down towards 68.25 and 6800. If we stay above 68.50, I'd watch for a bounce towards 80, 85, 89. See if we get rejected there. That'd be an opportunity to short. If we get back in the drunken sailor range, it's going to be extremely choppy, low exposure net OI, be driven by the intraday vol metrics, call versus put speculation, as well as our MTM, key vital tool, watching sentiment, call versus, buying versus selling in the overall market. So hopefully that covers everything today. Essential levels overhead, essential levels to the downside, and what we're looking at via the SPX option structure and our trading plan for today. So, all right, I think I've covered tons of stuff. Let's see where we're at pre-market. So we're just hanging around 68.26. These are the key areas I talked about on SPYs and Qs, negative GEX at 680, COTMP 679, and then Q at 600 and POI at 600. Historically, if we get below these levels, we're going to see a lot more weakness in the overall structure. And not necessarily, usually this is POI is historically where we can see a bounce level because that's where the highest speculation is of puts. And usually we'll see some monetization. Now we could see an undercut and sweep and then move back above, undercut and sweep, move back above. And then you see the IWM and N-Trans also. Below N-Trans, historically, we see much more weakness in that overall structure also. So what we're watching for is a couple things, as I discussed, extended on the overall GEX ratio to the downside. We'll be watching to see if we see a bounce, 680, 600 on SPY Qs, key levels, 6,800 SPX. We need to get back above 6850. So just lots of things lining up for key levels to either go below, and we see a selling, we see a spike in VIX, we see sweep belows and possible recovery, or do we start to stabilize here and we see some put monetization and a resultant bounce back to the upside? Then we start to understand or readjust to see if we see out of the money call speculation come in. So that's the key areas for today. That's what we'll be watching. We have our popcorn. We're ready for all the if-then scenarios. But if there's anything you take away, I hope you've watched all of our pre-market preps and understand that we were looking at this transitioning to weakness in the overall SPX option structure, as well as the market trend model. And we were hoping we were keeping people out of harm's way and being cautionary. If we haven't, make sure you let us know, and we'll try to articulate that better. At least I think we've been trying to do that. So with that, thank you everybody for joining us. GameEdge.us newsletter. Check this out, put your email in. You'll be delivered this on the weekend. Beyond the Bell goes over our thesis and tools. Free courses, GameEdge Fast Pass. Pretty much that covers everything that I went over this morning. All of our tools in depth, how to use them, how to look at them, how to evaluate the data, and navigate the SPX option structure. A couple other courses down there. Click on the blog. I posted our market trend model blog from this morning. Again, extensive education about all of our tools and how we navigate. And then click our pricing tab. Again, come join us. 14-day free trial. All the tools turned on. I think we still have our team going with the challenge that if you don't make money in the first 14 days, you give us an honest to goodness look, you study the education, and you don't make money in the first 14 days, we do refund you. So I think that's still going on with our team. If not, I'll have to get thrown under the bus from our team because they'll be saying that I shouldn't have brought that out. But really, give us an honest look, do all the education, and come in and come into the chat. Our team is in there every day, and we do open mic on Sundays, answering questions every day. So that is our key foundation at GameEdge, is education and helping people get up to speed rapidly to become profitable traders. So, all right, let me know if anybody wants to go over any individual equities and tickers. We have a few minutes before the open. I know this was extremely long this morning, but I covered a ton of stuff. So absolutely KGB. Yeah. Again, Microsoft, all that we ask is you do the education, you do the work, and you give us an honest look. So Microsoft, obviously most of these are going to be put dominated because of the move back in the overall structure. Okay. So put dominated on the next quartile OIs. We're below transition 400 on Microsoft key area. I'd look for some some stabilization there. That's going to be key. Let's see what the 6th is. Put dominated. Yeah. So this is what happens within the overall structure when you see pullback, right? In tech, right? In these names, they flip to put dominated, right? You see significant amount of in the money calls that were probably below us are getting removed. And now you have in the money puts overhead, right? And that's just what occurs with most of these. So Amazon. And if any of these are not put dominated as Amazon is here, those are the ones to take notice that when the market starts turning back to the upside, put those on your list, right? So Amazon, call dominated structure looks fantastic on Amazon compared to Microsoft, right? You can see those two structures there. So if I was a person looking for a long-term trade, I would not be entering Amazon at the moment. But once the market trend model starts turning back to the upside and we start seeing the SPX option structure improve, Amazon will be the first one I would go to. You're even at transition there. So you're not even below transition on Amazon. And again, not saying we can't see more weakness in transition, but you really want to look at MSTR. Oh, that's hilarious. Not one that I trade, not one that I look at, but as you would assume, extremely put dominated, right? I mean, spot prices here. Interesting though, we do have put dominated, but supportive into 115 though. That charm level there would be interesting if we tested that. But yeah, MSTR just extremely weak to the downside. So nothing to say there. Tesla, let's see where we're at now. Put dominated on Tesla. Spot prices here were below transition. Significant in the money puts overhead. Still speculators to the upside though. And then you do have in the money calls below us. So still supportive on pullback there on Tesla. I mean, I would anticipate more weakness though. When the market starts pulling back, it's 1-to-1 correlation on those higher beta tech stocks. So Iron, put dominated, supportive though at 40. That'd be an area. And then you see in the money calls below us, even though we're put dominated, that's all those puts overhead. 44.50 is not going to go above that. You're below transition. So I think Iron could be supportive into 40 and not a lot of speculation here. So I wouldn't see a rapid move down, maybe 35 if we get significant selling. But Iron does not look that bad, even though it's put dominated. So Google, I know they had earnings last night, obviously, and the OI is probably not updated significant. Scott, yes, we do VIX structure review. We do that for our members in our Discord. We don't use VIX. You can look at the VIX in our web app, but we use some other tools to look at the VIX. And I'll show you the VIX here in our web app. But so put dominated on Google, supportive to 300 to the downside. I'm not sure what we are pre-market, so I would check that out. But Google still doesn't look bad unless the structure is going to significantly change. But in the money calls below us. So pullback, I think, should be supportive there. So I'll take a look at the VIX for you and show you what it looks like. So upper quartile. So we do watch the VIX. The reason we watch the VIX is when it changes from put dominated to call dominated, right? Obviously. And you see 25 is PGEX. So if we spike to 25, most likely that's an area I'd look for some stalling. You see in the money call, add the money call speculation from 20 all the way up to 25. So if that's what you're looking for on the VIX, that's what we do. Now, we don't watch this day over day over day, obviously, because of the expiries. In the VIX, we look for those slap you in the face changes in structure. This was a slap you in the face change structure. Put dominated, put dominated, put dominated, change to call dominated, right? So it tells you that speculators are coming in, they're opening calls. Most likely we're looking at some sort of, overall spike in the VIX, right? So that's what we're looking at. So Tesla, yeah, I mean, Tesla's story is still great. Amazon's story is still great. All those stories are still great. You're just seeing short-term weakness in the overall market, right? I mean, I'm not speculating where Tesla's going to be, but you can see the structure, on Tesla is not completely falling apart, right? I mean, you have this below you, right? These are in the money calls. These are entrenched. These are out to 2027. These are not going away unless you see a macro change in Tesla's overall thesis, which I don't think you're going to see, right? And this is not financial advice, but you have speculation. It's in the money calls below you. So what changes is the speculation to the upside. And this is where your short-term speculation is going to change right around spot price, right? These people entrenched down here, long-term holders, they're not changing anything. These are probably leaps, again, on out into 26, into 27. These people have no fear, right? They're entrenched and they're going to hold unless we see, again, a significant change. And then you'll see a change down here. But for us, as long as you're seeing this, then most likely you're going to continue to be supportive. So, all right. All right. Thanks, everybody. Looks like it's market's opening now. So, again, thanks, everybody, for joining us. Like and subscribe on X and YouTube. You'll be notified when we go live with our content. As always, manage risk today. Let the market play out. Let's see where we're at pre-market here. So we're testing that 680 spies and Qs. So that's going to be important. Let's go ahead and move over to the SPX here. So we came right down. We're at 68.15. So 6,800. We're really going to watch that at the open here and see if we test that 6,800. If we hold this area and we start moving back above 50, remember that what we talked about, move back above 50, then that could be in key area for the bulls, and then move up towards 68, 80, 85. We got to cross 69 first. 68, 69. Once we get across that, 50, 69, and then we would look for 80, 85 up here towards our drunken sailor range. I would anticipate 6,800 to hold. Okay, that's not financial advice. Just looking at the structure, I'm anticipating 6,800 to hold. What happens after that, I don't know. But I'm anticipating if we do get a sweep down here towards 6,800, I'm anticipating that to hold, possibly bounce back to the upside, and then we would reevaluate and kind of see where we're at. Okay, that's our overall game plan for today. So we're below that 680 now on SPY and Qs. Looks like we're getting those sweeps. Most likely you're going to get some fear this morning. A spike in VIX would be good. Spike to whatever, 20, 25. Spike in VIX, and then start to see that back off some. That would help volatility drop. That would help Vanna come in. And then if you see some put monetization, out of the money calls come in, then that would be the setup for an overall move to the upside. If we don't see that, we're going to continue to the downside, right? So for me, like I said, I would love to see the 6,800 test this morning, have a kind of morning type reversal, start moving back to the upside, see the VIX drop, see how the money calls come in via our intraday call versus put speculation, and then move back to the upside. As I said, we're getting stretched. We can stay down here on our GEX ratio, but we're getting stretched to the downside. Historically, this is where we see usually some sort of bounce. So that'll let us know either way, right? If we're going to see that, or if we're going to continue to the downside. So, all right. Thanks everybody again for joining us. I know a long run this morning. It looks like we had a ton of viewers. If you're new joining us, again, like and subscribe. You'll be notified, and go check out GameEdge.us. All right, everybody, manage risk as always. Have a great day. We'll see you later.